And it's the midweek edition of Business Incorporated live on Channels Television. Coming up in the next 25 minutes. South Africa's inflation edged high in August, with headline consumer inflation up 4.8% year-on-year in August from 4.7% in July. Zimbabwe's gold production fell 15% to about 19 tons in the first 8 months of 2023. Plus, majority of Kenyans along the Namanga border flee to Tanzania to buy cheaper fuel. Hello, welcome to the program. I'm Ladi Williams, and first off, as always, let's take a look at what's happening in the markets. Starting on the African continent, there we see the NGX. I was marginally down at intraday earlier today, but we see that right now, 0.03%, that's the number. South Africa's JSE index, 74,129 points. 0.44% on the flip side compared to what NGX is doing right now. Let's look at the other markets we track in North Africa. I'm talking about the EGX 30 there. We see it's negative sentiment there, 0.10% down. 19,000 though, lost that 20,000 level. That's for the EGX 30. And Kenya, not back at the 100-point level for the all-share index, but 0.44%. That was a close yesterday. Let's flip over to the Middle East now. We see mixed sentiment in the Middle East, but positive in the UAE with Abu Dhabi and the Dubai index, both up. Abu Dhabi marginally up about 0.02%, while the Dubai index is up a bigger 1.02%. Other markets we track in the axis there. Saudi Arabia, that's down 0.33%, and Qatari index also down 0.12%, 10,306 points. All right, now let's move over to Europe now. Take a look at what's happening there. I see the OECD says global economic growth this year should come in around 3% before dropping to 2.7%. We're going to get details on that right after this. Now, we'll just take a look at what's happening at intraday on the NGX. First of all, we have Oluwaseun Dosunmu right there, Head Investment Research, Parthian Securities. Dosunmu, great to have you.
Thank you. It's good to be here.
Fantastic. So yeah, 0.03%, marginally down. That's what the NGX printing right now. But what are you seeing in the market right now? What's driving sentiment?
Thank you for that question. So basically, we're seeing that the market right now is largely driven by the small cap stocks. I mean, we're seeing profit taking in Dangote Sugar. One of the reasons why the market is down today. But in terms of the volume and value traded, we're seeing Oando topping the chart. So we have Oando, we have Cordville Business Solutions and Chams. Those ones are actually doing quite well in terms of the volume traded. Another thing that we need to take note of is the fact that the overall market performance now is we're seeing a double top movement because in the last couple of weeks, we saw that the market peaked to 68,400 range. Which is the highest we've seen the NGX ASI get. So right now, the market got close to that point and now is pulling back. So like I mentioned, we're seeing a double top movement. Right now, we're also expecting that, there might be a mild pullback. We started to see that kind of play out. It's not surprising. The market has been on a roll this year. So right now, I think what investors are actually looking out for is to see, basically investors are positioning in anticipation of what the decision of the MPC meeting will be next week. Also, investors have been reacting to the policy which was released by the central bank, stating that, banks should not spend out of their FX revaluation gains. So when that policy was released, we saw that activities in the banking sector actually slowed down. Buying activities in the banking sector actually slowed down. Going forward, looking forward to what's going to happen for the next quarter, I believe that will be largely dependent on, the performances. Right now, we've not seen, Access Bank release their results. I think that is one that the market is actually waiting for.
Right. All eyes are on that. And definitely, I don't know what you're expecting for the next MPC meeting. There might be a new leadership by then, approved by the Senate. But what are you expecting? Is it going to be a hold or maybe another hike?
Based on, the previous decisions by the CBN, right now it's hard to make a call, but based on what they've done in previous times, we've seen that their decision has been hinged on the performance of the inflation rates. And we know that the inflation rate currently is at 25.8%, which is higher than the 24%, a little above 24% that we saw it at. So if we go by what they've done previously, we expect them to hike interest rates. But right now we have a new, what's it called now? We have new leadership at CBN.
Right.
So all eyes the investors' attention are focused on, what the new CBN governor will likely come up with.
All right. What are you seeing for close of trade today?
Right now it's hard to make a call because we're seeing that activities are swinging, are oscillating between bid and offer. But then, as you mentioned, as of midday, we saw that activities were actually negative. It won't be surprising if market activities close in the negative, because basically investors are booking the profits that have been made in the last 3 days.
Yeah, so, definitely. A lot of profit definitely has been made in the first half of 2023 on the NGX. Thank you so much. Always great having your perspective. Oluwaseun Odosuru, Head Investment Research, Pathian Securities. Thank you.
Thank you.
All right, now let's move on to Europe. Now, see, the OECD says global economic growth this year should come in around 3% before dropping to 2.7% next year, but growth rates are very different in different parts of the world. Lars Holter, as with DW right there in Berlin, has looked into the study. Great to have you, Lars. So what can you tell us about these latest expectations?
Hi, Ladi. Thanks for having me. Indeed, there is quite a spread on that list in terms of which countries are booking economic growth and who's falling behind. Let's start with an obvious observation. In 2022, global economic growth stood at 3.3%. So 3.3% for this year and 2.7% for next year shows a pretty straightforward trend. Global growth is weakening. And that's not even surprising. Most economies around the world have been dealing with massive inflation. Central banks have hiked up interest rates and reined in investment and spending, and they cooled global growth down a bit. Now, some of the global weakness is due to China. The experts see that markets still grow at a rate of around 5% in each of the next 2 years, but that is quite a drop-off from earlier numbers. Meanwhile, the US is a pretty strong driver for global growth. The world's largest economy is growing at a clip of 2.2% this year and a less impressive 1.3% next year, but that's still pretty good. Brazil, India, and South Africa are seeing very strong growth. And then let's look at Europe. For the Eurozone, the forecast stands at 0.6%. And then, well, there's Germany at the very bottom of the list, looking at negative growth, down 0.2% this year. Only Argentina being even weaker.
And what does the OECD suggest Germany should do to bounce back?
Well, I guess we have to look at why Germany is that far down on that list. And a huge factor is high energy prices that are a problem for the export-driven German industry. Mostly energy-intense industries are currently suffering. Among those are the steel and aluminium industry, the chemical and materials industry, glass, paper, cement. All industries where companies are falling behind in international competition. Now, the German government has been looking at subsidies to help with these high energy costs, but that has not gotten far, at least not yet. The OECD, meanwhile, says Germany needs structural reforms not to fall behind even further. You can't help but think of the bureaucracy slowing down the German economy, the lack of skilled labor, the glacial pace the government is moving on many of these current issues. The problem, of course, while most Germans would likely agree that reforms are needed, it'll be extremely hard to agree on what they're supposed to look like.
Right, and what are investors looking at in today's markets?
Yeah, once again, all eyes are on central banks today and for the rest of the week. In Washington, the Fed will make a decision on its monetary policy. And while no one is really expecting another rate hike, investors are worried that the Fed might hint at a prolonged period of high interest rates with no lowering in sight. And that is quite a change from the general mood just a few weeks ago, when many thought that after much tightening, the Fed would soon relax its policy. After all, inflation has long dropped from the eye-watering levels seen in the middle of last year. But as of right now, oil prices have gone up, and that's leading to higher inflation once again, causing a headache for officials as they try to bring prices under control. So we'll be hearing from the Fed later today and then from other central banks before the week is over.
Right. All eyes on the central bankers, the top central bankers globally. Thank you so much, as Lance Holter, right there in Berlin. Heading on to the U.S. now, talking about the Fed. You see stock futures gained this morning out of latest interest rate decision from the Federal Reserve as the recent pump in oil prices eased and Treasury yields backed off multi-year highs. Futures tied to the Dow Jones Industrial Average gained about 81 points, 0.2%. S&P 500 futures and the NASDAQ 100 futures each added about 0.2%. Well, let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market slid on Tuesday as many are waiting to hear the Federal Reserve's outcomes of Tuesday's meeting. It is very clear that many investors are watching to see how the results will come out and if the Federal Reserve will increase interest rates. It is expected the Federal Reserve will not increase interest rates, but will have a forecast for the economy. This has caused the stock market to be a bit flat and a little bit of a dip on Tuesday, as the Dow Jones was down at 0.31%, the S&P 500 down at 0.22%, and the heavy-tech NASDAQ down at 0.23%. It is also clear that investors are going to see how this will impact the U.S. economy and the job market. This economic forecast will have a bit of an impact on the rest of the week for the U.S. stock market.
Respondent Mary Bird giving us details of yesterday's close there. Well, so checking on Asia now, see Asia Pacific markets fell across the board as China left its 1-year and 5-year loan prime rates unchanged, and traders brace for the U.S. Federal Reserve's rate decision that's coming out today stateside. China's 1-year, 5-year loan prime rates were held at 3.45 and 4.2% respectively. And we see behind me there, Nikkei has now closed down 0.66%. The Kospi did pick up again there, 0.02%. Green, HSI index 0.62% down. Other markets we track in Asia, see the all-share index for the ASX 200, 0.46% down, and 0.52 for the Shanghai Composite. So we see it's mostly red. Red is color right there in Asia. To oil markets now, we see oil prices fell, 1% today ahead of the U.S. Federal Reserve's interest rates decision, with investors uncertain when peak rates will be hit and how much of an impact it will have on energy demand. We see the global benchmark Brent crude futures fell about 76 cents, trading at $93.58. US WTI Texas Intermediate crude lost about 0.9%, trading down 80 cents at $90.40 a barrel. Let's see if it loses that 80-cent level. Investors are waiting the decision from the US Fed, and definitely rates do have direct impact on oil demand going forward. So investors are definitely watching out for that. Let's look at the metals market now. We see gold, little change today as investors brace again for the interest projections and remarks from Jerome Powell following the Federal Reserve's monetary policy meeting. We see spot gold that was steady at $1,931 per ounce, holding below its highest level since September 5th. That was reached on Tuesday. U.S. gold futures, that was flat, $1,953 per ounce. The Fed officials are widely expected to keep rates on hold for now, but also flagging new economic projections, whether they feel rates still need to rise further before the end of the year. Welcome back. Well, the South African Reserve Bank has raised interest rates 5 times this year. Meanwhile, on Thursday, the Monetary Policy Committee is expected to announce its decision on whether to take any changes to lending rates. The impacts of interest rates have been significant in the country. Some consumers are resorting to skipping payments. Many South Africans are turning to their credit cards to buy necessities, but at what cost? Our correspondent Innocent Samosa reports.
Monthly basics have become expensive in South Africa. Consumers are finding it challenging to navigate these difficult times with shrinking salaries and the rising inflation. Many households resort to using credit cards for basic necessities such as groceries. This has become a common practice, creating an ongoing cycle that often leads homes into debts. In certain instances, desperation drives people to seek assistance from loan sharks, locally known as mashonisa in South Africa.
It was the worst experience, so I would never recommend it to anyone. If you know that you need money, borrow what you need and make sure that the person you're borrowing it from wants the same amount, no interest or anything.
Thabo Mokoena, a loan shark, not his real name for security purposes, explains that his clients range from business people to professionals.
Get people that you never thought would actually come to you and ask for money. And some of them are professionals. Some of them are those who are doing, hard labor and stuff, not necessarily in the professional space. But a lot of them, you would be shocked that someone who's driving a so-called big car would come and borrow money from you.
It's a registered and unregistered business. It is unknown how many people are trapped. But what are the consequences of those intentionally evading payments? Gugu Nkosi, CEO at Kwande Finance, explains.
Depending on the size of your loan, then ultimately, yes, the people who do have assets and money that can pay the loan but don't want to pay, they are unwilling to pay it, then for those people, yes, the attorneys will come in, there will be a sheriff appointed, and some of your assets will then be attached, and they will then be sold in order to cover some of your debts.
However, the credit world can be shrewd at times. Founder of Good Life Money, they arrive.
And there are many consumer rights that I can talk about, but the ones that would really help take people out of debt by just merely talking to the experts and helping them get their credit reports and their credit analyzed. This one of Prescription Act 68 of 1969.
This year, the impact of interest rates has been significant. Ama Mohapi, a business coach, suggests that consumers should prioritize saving for rainy days.
Ask yourself, what are the long-term effects, the negative effects? If I don't change this habit, what's going to happen in the long run? Right? If you don't change your money spending habits that you don't like, what's going to happen in the long run?
For some, the feeling of being free from debt is priceless. In the meantime, South Africa's culture of borrowing continues. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
Right, the borrowing culture right there. And back here in Nigeria, we have our own loan sharks. They come in form of loan apps right here. Let's talk to our correspondent right there, Innocent Samosa. Innocent, very interesting report there. And back here in Nigeria, we have our own loan shark issues, but most of them come in digital lending apps. Do you also have digital lending apps over there?
No, we do not have digital lending apps here. I guess maybe the loan sharks, they don't trust the changing world, the digitized world, but we don't have those ones, Ladi, unfortunately.
Right, because right here, if you don't pay, they will name and shame you. I've seen some interesting stories. They actually go spiritual on you when you don't pay. But let's look at the August inflation data. We see it's higher, but still within the Reserve Bank's target. What are you seeing at the next meeting?
100%, Ladi. In fact, South Africa's August inflation saw a rise in 5 in just 5 months, whereby it's seen a significant rise of 4.8%. And of course, we can attach those that rise to the likes of municipal rates, for example, water and electricity. But this rise, Ladi, it was in line with what many economists have predicted previously because of the unreliability of the electricity and the fact that it's expensive. Now we have a court case that is sitting with the Pretoria High Court, where the main opposition party in South Africa is now taking NASA to court and asking them how did you arrive to receiving tariffs? But also we're speaking about tariffs of electricity that is not reliable at all. As you've rightly mentioned, Ladi, the 4.8% increase, it remains to be seen whether or not it is in line with the Reserve Bank as target range of 3% to 6%. But many economists have been saying that this is what the Reserve Bank would really wish. But we understand, as you rightly alluded, Ladi, on Thursday, they will indeed be meeting to announce whether or not they'll keep the rate steady or not. But we understand that chances are they will not raise it. They will keep them steady. But for long-term projections, some economists have been predicting that for a long term, we would see inflation in South Africa trending around 5.00% in 2024, and of course 4.8% in 2025. So those are just predictions from different economists here in South Africa. Like you rightly put, Ladi, it's challenging times. They resort to go to loan sharks at times. These unregistered loan sharks, they will take people's belongings. Here in South Africa, Ladi, they'll come and take your furniture if you're unable to pay them. And sometimes they'll take your personal documents, your precious documents, for example, your ID or your passport. They'll take that as collateral if you're unable to pay. But it has been a challenging time. That's why I'm saying that I don't think that the Reserve Bank will touch the rates this time around. They'll keep them steady, Daddy.
Right, and it's even worse when you're borrowing to actually eat, because at the end of the day, there's no productivity there. Quite incredible. Thank you so much for that interesting report, Innocent Samosa, correspondent right there in South Africa. Thank you.
Thank you, Colin.
All right, now we see Zimbabwe's gold production that fell 15% to about 19 tons in the first 8 months of the year, partly due to lack of funding by small-scale miners to modernize operations, according to data from Fidelity Gold Refinery, Zimbabwe's sole buyer of the yellow metal output during the first 8 months of the year was 15% ahead of about 20 tons delivered during the same period last year. Small-scale miners, traditionally the largest contributor to the country's gold production, have in the past decried the unwillingness of the banking sector to avail loans to the sector to modernize operations and boost production. Zimbabwe is expecting to produce 40 tons of gold this year from 35.3 tons last year. Gold Miners Association of Zimbabwe chief said it was still premature to authoritatively conclude that the 40-ton target would not be met. A majority of Kenyans along the Namanga border said they're saving some money when they get fuel from the neighboring country. Energy and Petroleum Regulatory Authority increased pump prices to a maximum of 200 Kenyan shillings per litre, removed the concerns among Kenyans who are already grappling with the high cost of living. Global petrol prices that in Tanzania, a litre of super petrol, diesel and kerosene retail at 193 Kenyan shillings, 196 Kenyan shillings. Motorists say the cost of living in Kenya is very high due to increase in fuel. The only relief is for operators near the border, since they can fuel in Tanzania. And that's the show today. Thank you so much for watching. I'm Ladi Williams. Do remember you can catch more updates on www.channelstelevision.com. Thank you so much for watching. I'll see you again tomorrow. Bye.